Good afternoon, traders, and welcome to today's daily market review. It is Monday the 17th of August, and today we're looking at the FTSE 100 stock Lloyds TSB. Now, since the 25th of November 2011 up until around the 5th of June 2015, we've seen a significant and steady uptrend within Lloyds TSB. The market price has moved from 2164 and had a high of 89.35. Current market price trading in and around 79.83. Now, during the uptrend between 2011 and 2015, we've seen three significant corrections. The first took place between March and June 2012. The second between February and April 2013. And the third was between January and April 2014. Now, all three opportunities would have given you a chance to climb on board the trend, and currently we have another opportunity. So since June 2015 right until the current day, the market has begun to decline, and we're seeing another correction take place within the uptrend. So as correction traders or retracement traders, we're going to be looking for an opportunity we can exploit to climb on board the trend. So we're going to zoom into the daily time frame so we can closely look at the structure of the correction. And as we can see from June 2015 to August 2015, we can see that the correction has taken the form of an AB equals CD correction. Okay, so for those of you who have followed our daily market review, you should be very familiar with this pattern, and you should also be aware that it's a high probability reversal pattern. The idea is we look for a termination or an ending to the pattern, and then once we have received a valid entry signal on our entry time frame, we will then climb on board the current trend and execute a trade to either the buy or the sell side. So in this example, we're going to again apply our 5 factors to the market, which is momentum, pattern, price, and also time. And then we're also going to look at the Elliott wave count, which is what identifies the nature of the pattern. So in terms of momentum, we have the market in the oversold zone, and if we go back to the weekly time frame, we can again see that the indicator is in the oversold zones. So this generally means that there's a high probability that the market will trade sideways to up over the coming weeks and days. In terms of pattern, using our Elliott wave analysis, we've identified an AB equals CD pattern, or an ABC. And in terms of price, we've uncovered 3 distinct Fibonacci cluster zones. Our first zone at 80.77 to 80.11, second 79.18 to 78.94, and our third is 77.92 to 77.42. Now, preferred zone is our second of 79.18 at 78.94, and this is because it contains the 100% projection of our A leg within our structure, and once projected from our B point comes in at this zone. In terms of time, again we measure the cycles that take place during the price action. This can be low to lows, high to highs, high to lows, and various other cycles. We apply Fibonacci ratios to them, and then we project those out into the future. So in terms of time windows, we have our first time window, which is the 19th of August. So we'll be looking for a high probability reversal time window of the 17th to the 20th of August, and our second is between the 24th and also the 26th of August. Okay, so what we'll be looking for is we'll be looking for a confluence of all these factors to come together. So we'll be looking for the price of 79.18 and 70.84. We'll be looking for the time factor of as it stands, the closest will be the 18th to the 20th of August, and then we'll also be looking at our momentum indicator. So a high probability reversals zone of 79.18 to 78.94, and the high probability reversal dates are from the 18th to the 20th of August, and also the 24th to the 26th of August. So during the date that we've uncovered, we'll be looking for a moving average cross, and also be taken out of a swing high. So we can currently see that the two moving averages are uncrossed, but the distance between them is narrow. Once we see a cross here, we'll be looking for a violation or a closing beyond the level of 80.98. Okay, so once we see at least two of our factors come together, in this example it will be our time and price. We have the price zone has been hit. We still have a day before our time zone has been hit. So once these two have come together, we're going to be looking for a moving average cross, and also be taken out of a swing high. So in a nutshell, guys, we're expecting some significant upside to Lloyds TSB. In terms of our targets, our first target, once we receive an entry trigger, we're going to be looking at 88.12 level, and then our third, we'll be looking at 89.35. Beyond these levels, we're going to be applying our usual Fibonacci ratios to the entire structure of the pattern. And to do this, we apply the 1.272 and the 1.618. If you want examples of this, you can always look at some of our previous reviews where we show how we plot targets, high probability targets outside the structure of an AB equals CD pattern. So once the correction has ended, we'll be expecting price action to reach beyond 89.35 at a minimum.